The dream is sold on every other Instagram story and YouTube ad flashing across screens in Nairobi, Mombasa and Kisumu. You know that young trader posting next to a sleek Mercedes he supposedly bought from a single trade, with captions like 9 to 5 is scam, or a 9 to 5 job is a scam, or the Forex gurus, those ones hosting lavish seminars at city hotels, flashing screenshots of profit spikes that seem too good to be true. You see, it's the siren call of Forex trading, amplified by a wave of cloud chasing personalities, and it's louder in Kenya than ever before. But behind the filtered success stories and curated luxury lies of expressing simple questions for the curious, pressing simple questions for curious onlookers, is it a genuine opportunity to build wealth, or just a well-marked fast track to financial ruin? So what exactly is this Forex that everyone is talking about? The fancy term is Forex exchange, but let's break it down into something we all understand. You see, if you think about when you plan to maybe travel to another country, like let's say or when you need to pay for something online in US dollars, you go to a Forex bureau on Moi Avenue or in Westlands, depending on where you are. You look at the board showing the exchange rates, or even in banks you see those boards. Maybe today $1 is buying maybe 130 Kenyan shillings. You give the bureau 13,000 Kenyan shillings, and they give you back $100. Now imagine you believe that in a week's time the Kenyan shillings might become stronger. Stronger means rising, or the value is higher than the US dollar. You think the rate might move to, let's say, $1 equals to 128 shillings. So you wait. A week later, you go back to the Forex bureau. Now, to get your 13,000 shillings back, you only need to sell your $100, because $100 you multiply that by 128 Kenya shillings, you get 12,800 shillings. But wait, you started with 13,000 Kenyan shillings and now you have 12,800. That sounds like a loss. But Forex traders do the opposite. They try to profit from currency moving in the opposite direction. If you believed the dollar would get stronger against the shilling, you would buy dollars today at, let's say, 130 Kenyan shillings, hoping to sell them later when $1 is worth, let's say, something like 135 Kenyan shillings. That difference, that 5 shillings against per dollar, again, that 5 shillings gain per dollar is what we call the profit. In essence, Forex trading is simply speculating on the price movement between two currencies, and it's trying to buy currency when it's cheap and sell it when it's very expensive, or vice versa, depending on how you are monitoring the market. The only real difference is that instead of going to a physical bureau, you do it through an online platform, and prices change every second. That's why you can trade every minute, every second, every day, every month, anytime you want. So why Forex is so tempting in Kenya? This is why. Given the risks, we'll soon talk about why is Forex trading so incredibly popular, especially among young Kenyans, and the appeal is real, and it's built on few powerful pillars that speak directly to the economic realities and aspirations of many in the country. And the first thing you need to know is that the first thing and most importantly is the promise of financial liberation. That's why people join. In an economy where job opportunities can be scarce and salaries often struggle to keep up with the cost of living, the idea of maybe generating an income that isn't tied to monthly payslip is incredibly powerful. That is why you see many people trying to join Forex. Forex sells the dream of being your own boss, of breaking free from this tiresome or tiring 8 to 5 job. It's the allure of turning a small capital into a significant income stream, all from your smartphone. That is the belief that people have. Secondly, it is believed that it has a low barrier to entry, unlike starting traditional business that might require a massive injection of capital for stock, rent and licenses and many other things before you start to do your business. You can open a Forex trading account with as little as 500 Kenyan shillings or sometimes 1,000 Kenyan shillings depending on your brokers. All you truly need is the smartphone and a reliable internet connection. This accessibility makes it one of the most democratic yet riskiest financial markets available to the average person. Number 3 is the flexibility and freedom. People, they have that freedom. There is no boss to report to, no fixed schedules that you need to follow. The market is open 24 hours a day, 5 days a week, and 28 days a month. In theory, you can trade from a coffee shop in Karen, you are home in Isli, or while waiting for a matatu. And this control over your time and environment is a huge draw. Finally, there is this potential for high returns. People trade for that. The use of leverage, which we will explain later in the video, means that even small price movements can lead to a significant percentage gains on your initial deposit. It's this potential for rapid growth that fuels the dream and keeps people coming back, hoping to catch the next big market move. You see, now we arrive at the part that many gurus and flashy Instagram pages conveniently leave in the fine print when they are explaining this Forex thing to you. For every dream sold, there is a stark reality. Understanding this isn't meant to discourage you, but to arm you with the truth, because you need to know what you're getting into. Let's start with the most critical statistic you will ever hear about Forex. You see, people don't say about this. Over 70%, sometimes up to 80% of retail traders like you who's going to join lose their money. Let that sink. The vast majority of people who put their hard-earned money into this venture end up with less than they started with. Are you going to be among them? Think about it. This isn't casino where the odds are slightly against you. This is a professional playing field where the uninformed and emotional are consistently weeded out. If you go with emotions, then you don't win this. Why does this happen? The number one culprit is something that is often marketed as a benefit: leverage. what is leverage? Leverage is essentially borrowing money from your broker to place a large trade than your capital would allow. You see, in Kenya, it's not uncommon to see leverage offers of 1:1 to 100 or 1 to 500. You will understand this later, or even higher. This means with just 1,000 Kenyan shillings, you can control a position worth 100,000 Kenyan shillings or more. While this can magnify your profits, it devastatingly magnifies your losses as well. You can either lose or win. A very small move against your position can wipe out your entire account in seconds. So leverage is a sharp, double-edged sword, and most beginners for most beginners it cuts deep and you end up crying. This leads to a second major pitfall: emotional trading. When you trade with emotions, the market preys on human psychology. When you see real money on the line, money you worked for, fear and greed takes over you. Greed makes you hold a winning trade for too long only to watch the profit vanish like that, and fear makes you close a losing trade too late, turning a small loss into a catastrophic one. So make sure you know when to quit and when to stop trading. Without ironclad discipline, you are not a trader. You are a gambler reacting to every flicker of a chart. Don't follow trends. Then there is the ecosystem of scams. The Kenyan Forex scene is rife with predators. You must be wary of things like unregulated brokers, entities not authorized by any reputable financial body who can manipulate prices. Refuse your withdrawals whenever you need them, or maybe simply disappear with your deposit. Sometimes you can deposit money and you watch them vanish in the account. So be careful with them. Also, we have those signal sellers and trap individuals or groups who promise to send you guaranteed winning trades for a fee. If their signals were so guaranteed, why would they need your subscription money? Think about it. They are selling a dream, not a sustainable skill. Finally, and most authoritatively, heed the warning from the Capital Markets Authority, that is the CMA. Kenya's financial regulator has consistently issued public notices stating that the forex market is largely unregulated and highly risky for retail investors. They do not license brokers to offer this speculative forex trading to the general public, and this means therefore if something goes wrong, you have very limited, if any, legal recourse. You are essentially on your own. So after weighing the dazzling allure against the sobering risks, we return to our central question, the reason as to why we are making this video. Is forex trading worth trying in Kenya? That is the question. So what is the answer for that? The answer is not a simple yes or no. It is a definitive. Maybe it depends. Forex trading is absolutely not worth trying if you see it as this. Number one, a get rich quick scheme or a shortcut to becoming that person you admire, that young sponsor that you admire. You see, if you want to do it quickly, stop it. Number 2, a solution to your current financial problems. Using rent money or school fees to trade is a recipe for a disaster. So don't think you're going to solve your financial problem at the moment using this one. Number 3, a gamble. If you see it as a gamble, maybe placing bet trades based on feelings, and you see you are in for a loss. Maybe seeing it as a passive income stream that does not require immense effort. No, it is not for you. It is arguably one of the most mentally demanding activities you can undertake. So, however, Forex trading might be worth considering with extreme caution if you approach it as, number 1, a serious skill to be mastered like learning profession. It demands hundreds of hours of education. You have to take a lot of time to practice, and psychological conditioning, you see. And also number 2, you need a long-term journey where the first few years are dedicated to learning, not earning. So prioritize first of all learning and not earning money. Learn and know what it entails. Next, you see it as a business venture where you only risk capital. You are 100% prepared to lose it completely. This is your tuition fee to the market. Number 3, if you see it as a personal challenge that requires immense discipline, then you're going to succeed. You see it, you approach it with patience and continuous self-improvement. In essence, the market does not discriminate. It doesn't care about your dreams or your financial needs. It only rewards skill, discipline, and a robust strategy. You need to have a certain strategy to keep trading. For the vast majority, it is a costly lesson. For a small, disciplined few, it can be a viable venture. The real question isn't, is Forex worth it? The real question you must ask yourself is, am I willing to dedicate myself to the arduous process of becoming one of the few who succeeds, knowing I will likely lose my initial investment along the way? And you see, your honest answer to that question will tell you everything you need to know about Forex. So if the stock warning have not deterred you, but instead ignited determination to learn this skill the right way, then this section is for you. Here is a responsible step-by-step roadmap. Ignore it at your own risk. If you want to know how to trade, then this is step 1. Education is your first investment. Education is your first investment. Spend money on books, not trades. Before you even think about a broker, your new home is babypips.com. babypips.com. Go through their free school of Pipsology. It is the Bible for a reason. It will teach you everything from what a pip is to how to develop a strategy. Consume this material relentlessly. This is your foundation. Do not skip this to chase a quick profit or to chase quick profits, because you're going to perish. Step 2. Live in the demo account. Step 2. Live in the demo account for months. Once you've chosen a platform, you will not click deposit. You will click demo account for months. Every day, practice. Your goal is to trade in this simulated environment with virtual money for a minimum of 3 to 6 months until you understand how the market actually works. Your goal is not to become a millionaire on paper. Your goal is to, consistently profit, to be consistently profitable over that entire period. You must experience losing streaks on the demo and learn to handle the emotion without real money on the line. This way you're going to actually get used to how to trade. This is your fight or flight simulator. Would you want to fly a real plane without one? Ask yourself. The third step is choose a broker with extreme caution. Brokers are everything. Do not just sign up with broker with the flashiest ads. Look for brokers regulated by reputable international bodies like the FCA in the UK or the ASIC in the Australia. They offer higher degree of client fund protection because you are dealing with your money. Read independent reviews and score online forums for user experience. Step 4 is start with risk capital, and also embrace micro lots. When you finally transition to real money, your first deposit should be an amount of money you are 100% emotionally prepared to lose completely. And think of this as a tuition fee, something that you are paying, and start trading in the smallest possible trade sizes. They are called micro lots to keep your risk minimal as you adjust to the psychology of trading with real money. And we can talk about step 5, which is one of the most important. Make risk management your religion. This is the most important skill you will ever learn. Before you enter a trade, know exactly what you will exit or where you will exit if it goes if it goes wrong. A common rule is to never risk more than 1 or 2% of your total account balance. So keep checking your account balance on a single trade. This ensures that a string of losses won't wipe you out and allows you to live to trade another day. Your survival depends on this. So that's all about trading. Is trading worth it or not? If you found this video helpful, please comment below, like the video, and also remember to subscribe. If you want to know the best brokers for trading, if you're in Kenya, you can comment below and I'll respond to your comment and explain to you what you're supposed to do. Remember to also share this video to your friends who are aspiring to become future traders. All the best as you plan to become a responsible trader.